So, imagine this. Someone tells you the smartest financial move you can make right now is to buy a stock that's currently trading at an all-time high.
Right. Counterintuitive.
Totally. It flies right in the face of, almost every investment principle you've probably heard. No buy low, sell high thinking here at all.
Definitely goes against the grain.
Yeah.
Most people would think, wait for a pullback or, it's already peaked. Too late.
Precisely. And that initial skepticism is, I think, exactly what the author of the article we're diving into today kind of relishes.
Okay.
It's titled Nvidia, Why I Am Aggressively Accumulating at All-Time Highs, written by Tony Hicks, published June 30, 2025.
Mm-hmm.
Our mission for this deep dive is really to understand how he gets to such a bold conclusion. He's not just calling Nvidia, hot tech stock.
No.
He argues it's a foundational pillar of the whole AI revolution, even now, even at this valuation. So we want to unpack his 12 core arguments, look at the facts he uses, the sometimes surprising ones, and ultimately see if we can grasp his claim that buying Nvidia now, it might be like getting in on Standard Oil or IBM before their revolutions really took off.
What's compelling right from the start is how he just confronts that conventional wisdom head on.
Yeah.
He makes it clear he's not buying because of market euphoria or some, what does he call it, Reddit-fueled hopium.
Right.
He says he's buying aggressively at these peak prices with a very clear conviction.
He really leans into that, doesn't he? He even calls NVIDIA the ultimate picks and shovels play of the AI gold rush.
Mm-hmm. The tools for the job?
Exactly. And the line that really grabbed me, he believes the ship hasn't even fully loaded yet.
For a company that's already so huge and talked about?
Right. How does he justify that?
Well, if we zoom out a bit, his core argument is that NVIDIA isn't some bubble waiting to pop. It's an empire in construction.
An empire. Okay.
And he stresses they're not just selling, individual chips. They're providing the whole foundational infrastructure.
You mean like the GPUs?
Yes. The GPUs, the graphics processing units, which are crucial for AI, but also the software stacks. Things like CUDA.
Which is their big computing platform, right?
Exactly. CUDA, then TensorT for making the AI run faster once it's trained, Omniverse for building virtual worlds, plus networking stuff, and these complete platforms like DGX systems, the GH200 Grace Hopper superchips, and now the new Blackwell chips.
Wow, it's a lot more than just chips then.
Way more. His point is, NVIDIA isn't just a player in AI. They are the indispensable player. They're already dominating before serious competition even gets its act together.
And the numbers in the article, they definitely back that up. This idea of dominance.
Oh, yeah.
It highlights that just in the past year, NVIDIA's revenue absolutely exploded. Jumped from about $27 billion to over $80 billion.
$80 billion. Wow.
That's like what? Over 200% growth for a company already worth over $1 trillion?
That's staggering growth at that scale.
And he uses this powerful analogy saying, this is not pets.com, this is not WeWork.
Okay, distinguishing it from past hype cycles.
Right. He says, it's the infrastructure build-out of the next industrial revolution, and NVIDIA is selling the bricks.
Selling the bricks. That's a great line. It really underscores his belief that this is something fundamentally different, foundational.
Yeah, and that selling the bricks idea, it's central to his whole argument. And it brings us to maybe one of the most astonishing data points he uses, NVIDIA's gross margins.
Ah, yes, the margin.
They're hovering around 78%.
78%. I mean,
yeah.
That number almost feels wrong for a hardware company.
It does. How does he explain that? Especially when the article compares it to, Intel, which he says is scraping along around 40%, and AMD maybe in the 50s. He literally says NVIDIA's in another stratosphere.
It's an exceptional number, yeah. And the author links it directly to what he calls their significant pricing power.
Pricing power, okay.
He explains that customers, particularly the hyperscalers,
the big cloud guys, AWS, Google Cloud, Azure.
Exactly. Them plus other giant companies are apparently begging for more chips.
Yeah.
They're basically building their whole AI cloud setup around NVIDIA's architecture because, there isn't really another option that offers the same performance and the whole integrated ecosystem.
Oh, so that demand lets them charge a premium.
A massive premium. Lets them command those kinds of margins.
So it's not just having a great product, it's having the only truly indispensable product at scale.
Pretty much.
Which leads right into what the author calls NVIDIA's impregnable moat, something he thinks Wall Street just doesn't fully get.
Okay, the competitive advantage.
Yeah. He notes, TSMC makes the chips, ASML makes the machines that make the chips. But he emphasizes NVIDIA's real lasting advantage comes from its software stack. CDA, TensorRT, Omniverse, the stuff we mentioned.
It's fascinating how much weight he puts on the software side.
Totally.
Yeah.
He makes this incredibly bold statement. He says, if you're building AI, you're either coding for NVIDIA using their whole system or crying into your obsolete FPGA.
Wow. Okay, so FPGAs being those other programmable chips that just can't keep up with modern AI compared to GPUs.
Right. And he acknowledges competitors. Sure, Google has its TPUs, AMD has the MI300 chips,
Right.
but he kind of dismisses them, saying they're years behind. And in AI, he believes years is basically like decades.
Years might as well be decades. That
Yeah.
really drives home the speed of this field.
It does. And speaking of speed and innovation, let's talk Blackwell. The article calls it the chip that changes the game again.
Right, the next generation.
We're talking the B200 GPU and the GB200 Grace Blackwell superchip. What's the big deal there? Why is it so important to his argument?
Well, it's a massive leap forward. Blackwell reportedly delivers, 2.5 times the performance and 25 times the efficiency compared to Hopper, the previous gen.
25 times the efficiency.
Yeah, which for customers means a lower total cost ownership TCO.
Right. More bang for your buck.
Exactly. And crucially, much faster training times for their AI models. That's huge.
And the demand.
He emphasizes demand isn't flattening, it's steepening. Blackwell is apparently sold out well into 2025 already.
Wow. So they're not slowing down, they're accelerating, and the market wants more.
Precisely. This isn't a company resting on its past success. It's constantly pushing forward, and the demand just keeps growing.
So it's not just about what they've built, but this clear path forward, which feeds right into the author's conviction that this whole AI megatrend isn't just some passing phase. It's a new economic era.
Yeah, he's very strong on this point.
He says AI isn't just a sector like, software or biotech. It's a horizontal transformation.
Horizontal,
Yeah,
meaning it cuts across everything.
exactly. Comparable, he says, to the arrival of electricity. Fundamentally changing pretty much every industry.
That's a big comparison. Electricity.
It is. And he gives concrete examples from the article. Autonomous factories, robotic surgery getting way more precise, AI generating media, defense simulations, smarter financial modeling, digital twins.
Those virtual replicas of things.
Right. And of course, the big one, large language models, LLMs, like ChatGPT and its successors. His firm belief, NVIDIA is the single biggest enabler for all of it.
A common thread.
Yeah. And he just dismisses trying to time this trend, says it's like trying to short the invention of the steam engine because you think coal prices will fall.
He doesn't pull his punches, does he?
Not at all.
Yeah.
Which brings us to NVIDIA's capital allocation, their insane buyback game.
Ah, the buybacks. $25 billion authorized in 2024.
That's the number. Now, for a lot of people, seeing a company buy back stock when it's at an all-time high seems odd. Like maybe management thinks it's peaked.
It can seem that way.
Yeah.
How does the author spin it?
He actually sees it as textbook capital allocation.
Okay.
His argument is when a company generates this much free cash flow, just an absurd amount like NVIDIA's,
Right.
it basically has two good options. Reinvest it to dominate even more, or buy back shares because management thinks the market is seriously undervaluing the company's real future potential.
So he sees the buybacks as a signal of confidence from NVIDIA itself.
Exactly. A powerful signal that they know what they're really worth. And this leads him to challenge how we typically value companies like this.
The traditional metrics.
Yeah. He argues looking at things like trailing PE ratios for a company with triple-digit growth, new tech like Blackwell rolling out, hyperscalers buying everything they can make, and this whole new sovereign AI thing emerging. Looking at old metrics is just doing it wrong.
So how does he suggest we should look at it?
He basically redefines NVIDIA, says it's not just a semiconductor company, it's a hybrid monopoly on AI infrastructure with sauce-like margins and compounding tailwind.
Okay, unpack SaaS-like margins for a hardware company. That sounds unusual.
It does, but it's crucial. SaaS, software as a service, usually has super high margins, right? Once the software is built, selling more copies costs very little.
Right, think cloud software subscriptions. High profitability.
Exactly. So he's saying NVIDIA's software moat, the indispensability of their hardware, it lets them achieve profit margins that look more like a high-growth software business than a typical chip maker.
Ah, so that changes the whole valuation game. You can't just compare to other hardware companies using traditional multiples.
That's his point. It shifts the framework entirely.
And that connects to another big idea he raises, sovereign AI.
Yes. That's a really interesting concept, the idea that whole countries will need to build their own AI infrastructure.
Not just for business, but for national interest.
Yeah, for competitiveness, national security, just staying relevant, basically. The article mentions India, Saudi Arabia, the UAE, Japan, all looking into building national LLMs, buying loads of GPUs.
So it's not just companies buying these bricks, it's governments now, too.
Exactly. And the author thinks this creates a whole new geopolitical moat for Nvidia. They're selling foundational tech directly to nations.
That definitely expands the customer base and locks them in even further on a global stage. Wow.
It brings us to his comparison of Nvidia becoming the Intel of AI, like Intel Inside, back in the PC days.
A powerful analogy. But he points out a key difference, right? Something Intel got wrong.
He does. He argues that Intel tripped over its own fabs.
Meaning they struggled with the manufacturing side. The foundries.
Yeah, the huge cost and complexity of making their own chips slowed them down. Nvidia, he says, stayed fabless and focused.
Outsourcing the manufacturing to partners like TSMC.
Right, which lets Nvidia just focus relentlessly on design, on software, without the foundry headache. He thinks competitors like AMD just won't catch up, not just on chips, but crucially on the software, the platform, the network effects, the mind share. He even compares Nvidia to Google in search.
Basically saying they're too far ahead, too entrenched.
That's the argument. And despite all this growth, all this dominance, he still insists it's still early.
That's the part that's maybe hardest to grasp.
I know. He claims we're only in the second inning of the AI revolution. Maybe the third if you're generous.
Given how much AI is already changing things?
Yeah.
Second inning.
Seems crazy, but he gives examples where AI adoption is still, barely started. He says most companies haven't really integrated LLMs into their core business yet.
Okay.
He points to the inference market actually using the trained AI models, edge AI running on devices.
Like smart cameras, phones.
Yeah. AI PCs, autonomous robots, digital twins, these AI agents that act on their own. He says these are all just getting started.
So the biggest impact is still to come, in his view.
That's exactly it. His conclusion is stark. This is not the top. This is the warm-up.
Wow. Just the warm-up.
And central to this whole thing, the foundation of this empire, according to the author, is the leadership. Jensen Huang.
The CEO, leather jacket guy.
Right. He calls him Professor X, calm, collected, 10 steps ahead. Credits him with basically inventing modern GPU computing and AI acceleration, and notes he's still incredibly aggressive, still visionary.
He really emphasizes that founder-led visionary leadership. Huang's track record of making these huge industry-shaping bets.
Yeah, the author flat out says, you don't bet against Jensen Huang.
A strong endorsement of the person steering the ship.
Definitely. Which brings us to the author's final point, his core investment philosophy here. He says, instead of gambling on finding the next Nvidia,
just buy the current one.
Buy the monster that is right in front of you.
He frames it as a long-term asymmetric bet on the defining company of the next era.
Yeah, and he draws parallels, like Amazon in 2012, Apple in 2016, Microsoft in 2018.
Companies that seemed too expensive or mature at the time.
Exactly. But they just kept growing, kept compounding value for years.
So his final takeaway is that Nvidia isn't peaking, it's compounding.
That's it. And the irony, he says, is that many investors are too scared to buy because they're stuck on old metrics, and they'll end up buying later higher.
Ouch.
He says he invests based on power, not price. It really forces you to rethink how you look at market cycles and value, especially during these huge tech shifts.
It really does. So to recap, the author lays out this incredibly bullish case. NVIDIA's dominance in AI infrastructure, those crazy margins, the software moat, the new Blackwell chips constantly pushing things forward. Strong leadership with Jensen Huang.
Right, plus the AI megatrend itself being like electricity, and sovereign AI is this whole new massive market.
It's a compelling, if very aggressive, argument that they're the foundational company for what's coming.
Definitely aggressive. So here's something for you listening to think about. If this analogy holds, if AI is the new electricity and NVIDIA is selling the bricks, what other foundational companies or technologies might be out there right now, maybe undervalued by today's metrics?
How would you even spot them before they become the next monster?
Exactly. And what does it mean for your own understanding of investing or just technology shifts in general if we really are only in the second inning, if this truly is just the warm-up?
A lot to chew on there.